General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do Thursday. That'll be the 25th. Just double check. I didn't trade. I think by Thursday it was like thinking it's week 4. Don't super push it. So here is going into Thursday. I would have wanted Monday's high just based on how we was delivering. We didn't take this and we ended up taking this. So let's just take this for Thursday. I think by here, really this day, so this was the day I didn't do. This day had me though. And then this was ingrained into my mind. This CFD, S&T. Like this is a thing now that I'm looking at both. So boom, the continuation play here. Trade idea. Good one shot, one kill idea to take for the week. Missed opportunity. We was looking at the level that got the stop hit. Should have been looking at this. Looking at this on the H1. So now it's Thursday. And then this happens. It's like, I ain't studying it now. I seen this. I was looking for this. And then it starts chopping. So the week is done. Here we got Asia high. Weird. But the way it's been flowing, it's kind of been bouncing. It's been bouncing ugly. This is algorithmic though. You can see. Came up here, this rejection block held. Well, it's not really a rejection block. It's more session liquidity, retesting this high, come up to this order block, this closing price. We had a fading to expand. Here, you would have been targeting Asia high here. I wasn't even studying it, but Asia high would have been looking nice, especially if we open here. Push up, yeah. I would have been looking for Asia high. This would have messed me up. After here, though, can we say that was it for the week? Nah. Let's go to one level just beyond that. Probably something on the H1. So this here, what is it, guys? This was not mental space to engage after missing Tuesday and Wednesday. Trading the weekly expansion being my goal, I decided to stay out. If my goal was to go to the charts and find a trade and make money, then it will be different. I got to keep my end goal in mind first. Time level trigger. We need better delivery. Monday through Wednesday. What did price deliver? Let's see. The pattern of time of the PD array. Nothing. The timing? I think for timing, maybe. After the move for the week plays out. Even the people who don't trade the weekly expansion don't have the best deliveries. And I think that's a gem in itself. Let's sit down. Here, no, I didn't engage, so that doesn't get filled out. This needs to go to the top because this will be the format hints on for Q4. Because I think I pretty much have the flow done since I did just start this for this month to whatever. If you follow, you know. But I think the Q4 stuff is laid out better. I don't have to do all this rearranging. It's Nas. Nas got the casino too. NASDAQ got the casino. That's funny. Hold on 1 second. Let me pause. That's funny. Nah, it's a casino. All right. 15-minute chart. Ugh. This Asia high, London open. Here, just like delivery wise, this will stand out. This closing price. I needed to stand out more. We came here, broke this, immediately rebalanced. You could say we came back to this daily open price. We didn't come down here and hit anything significant. After we took this out, it's really this. Hold on, wait. After we took this out, that was it for the delivery. There's nothing significant about this delivery except for Asia coming up here. And I'm definitely not looking at the charts of Asia ever. This, London, nothing significant about this. You can't even form fit anything in Thursday. Man, glad I ain't trade Thursday. Look at that delivery. It didn't go any. You could have called it from here to here. That's a trade. This is scalper. Let's rebalance this. But it's a scalper day because no daily profile presented itself. That buy is enough though. You take that buy and you be like, all right, that's it. You can chill out with just that buy and not care. Let's go here. 50% of previous week. That is important to note. From here to here. Know how we respected previous week EQ and it held. That's a sign of strength. You'll want to buy it in. If you're trying to buy something, the price just been going up and then it goes back to the price it was last week, about 500, or let's just say it's 5% cheaper. You'll buy that. You'll buy it. You take those little deals because we take them on them gas discounts. Them gas discounts don't be nothing. 3 cents. This is previous week range. Just this point of view. I don't need to see this though. This is the next day. Was this used as an array to count? Well, I don't think so because it didn't support price to go higher. You can say, let's take off this line or this text so I can see the line. You can say, 50% of this implied fair value gap held. Super form fitting, but that is what it is. You can say we took out this liquidity here. I should have did this part first. Tuesday, DOL was definitely the daily high or the daily fair swing liquidity. After that tap, it was over. It started in Asia though, because we seen how this candle formed here. Like this is the start of that candle. By the time New York open, the time of that tap was 9:30. Let me get the exact time to the 5. Nope, it was 9:40. Ooh, that's a good time. Trade of the day right there. Could have caught that. That was actually a good catch. Let's go to silver. Hold on. I put it on Thursday first. Thursday ain't do nothing. Friday did it for silver. Here. Bam. Okay, that's because it's a future. And then I'm gonna be looking at the Forex, because Forex starts here. But here, start the day, boom. Super bearish stuff. A lot of bearish divergences on silver. So we got this divergence here. It wasn't a strong continuation or nothing. So gold probably just melted. Created these double bottoms, and then just look at this. If this ain't engineering liquidity, I don't know what this is. And then this is an old order block that got flipped. Because we came back here, we probably tapped this monthly high. Let's move this order block here. And then let me tap this price. This is 191, not 186. And the monthly high is at 44,185. So it didn't tap. There's no precision there. You could probably grade this and be, at this point, you're just looking for what it reacted to. Break. Some type of breaker here. This is the last row of up candles. It violated it. And I would have wanted my stop small too, because it's silver and silver is expensive. You would have had to use this. No classic daily profile. No Asia made the low. London expanded. And New York retracement. Hold on, that's a classic. That's a classic profile. It's New York retracement. But I think New York retracement is more strict. I think it has to have. I think Asia got to get ran. There ain't no profile where Asia don't get ran. And that's a Forex. New York retracement. That's New York reversal. Classic body. Range, rally. Seek it, destroy. Destroy. That's London close reversal. Where's the New York reversal price profile? No, it's not this. Okay. Hold up 1 second. Okay, I found it. I'm thinking about classic buy day. Because classic buy day gives you that retracement. So I'm not missing just whoever this dude is on Twitter is killing it with these daily profile pictures. Trader Diego. Some of these dudes that make these Twitter publications, because you can't even call them posts. It's not classic buy day still though, because it should have took Asia low. It's supposed to go down, up, then retrace. Ain't no way this supposed to be right here. Something's going on if that's right there. Oh no. See. Okay, I got my time windows on this one. Man, news updated. That thing update way too much. It's just tacky. That's what it is. I'm not used to seeing such a tacky S&T on the H1. H1 is textbook. Came to this hour gap. We didn't retrace though. This would have probably been it. Here, let's say this is. You would have had to sell this for this to be the inversion. You could have bought this too late in the day. News gave the expansion though. I just want to see what this dot is. Maybe I have to put it on here. It's not telling me. Asia gave expansion. Asia and London gave expansion. Pre-market New York. retraced, and news release. Pushed it to take out the high. Created in London. I'm pretty sure that's the London time. Go to the 15. No, created in pre-market. Go to the calendar with the day. Nope, go back to 25th. Jobless, so it's unemployment. Okay. So this here, we took out this. So here, we were seeing this. And we were seeing and not closing above here, staying above here. So we had trap order flow between this midpoint and this high. Here to here. Stupid up day. So we were having notes, and then I start off the sentence with note. That's crazy. No, we were having daily failed expansion. But we were staying in premium of the last up close candle. This day, hold on, wait, before I even say it's this daily candle, let me make sure. Okay, cool, because sometimes candle was ridiculous, was massive. Notice a news day, and also no. That's it. This ain't too much you can say. Kind of set that up besides the news. That dollar news controls commodities. Unemployment is a big dollar news. Breakers, fair value gaps, that type of stuff would have worked. The simple ICT stuff. Let's go. Let's get this right. Make sure the Friday candle is right. See, Friday this Thursday. So it has to at least go here. Then go here. And then let me see what this looks like. So this is going to happen every time because in order for me to get the day, I have to get the day. Take off this arrow. That was a long time ago. Here. Yeah. I'm sitting here like, it's just back to back. Everything open, drop, open, drop. It felt like I was doing the same day. I'm like, but it just did the same exact thing. Look at how the midnight open kind of like is the key level there. What side of days? I'm thinking, put an asterisk. We should run these highs. Due to these days being one-sided. They need Asia ran. Need those Asia highs. Ran. Highs created in Asia are weak. They always engineer that liquidity. Here. What is this? Okay, that's just weekly open. Opened up pool. There is no takeaways here. We got this gap. We tapped it. You could say we reused it. What is this? Unemployment. Yeah, unemployment dropped that. Bad for dollar. Home sales dropped this even more. Very straightforward delivery. No major retracements to give setups. It's really a drop. What's that? Base drop. Supply demand. People hate. Type setup. Very straightforward. No major retracements to give setups. It was more of a drop, base drop, supply demand type. Supply demand, people type supply demand thing going on. Let's go here. Go to the daily. Week started here. What is this? Okay, this is Friday. Now this is correct. Thursday, retested weekly open. This was us closing through weekly open and retesting it. I think this is key here. It's not high of the week, because high of the week was Monday. But this is not the candle here, but the weekly open price. This here open price was That's the trade of the week. To target what though? Open high to target here. Yeah, it's low resistance liquidity run. Put this in the center though. And here was the tag. I need more of these. What if I do this? Nope, that don't go sideways. Yeah, I need more this type of stuff. Who put a whole? I do like this price label thing. I don't think I use this. Oh no, I don't. I hate that. Yeah. Just give me a trim line. For here. That's a day trade idea. Weekly open here with resistance liquidity round conditions. This is a nice day trade setup. It does not follow a typical profile delivery, but it's nice. Trading the delivery is better than trading the profile. This gets highlighted. Background color. Boom. And it don't stand out like I thought it was. I think it's the background. Okay, that's it's cleaner. All right, that's that on that. Then I gotta do Friday and keep going. Can't fall back on work no more. It's been busy. Just can't beat yourself up. Work still gotta get done though. See this. Yeah, that's it. All right, y'all. Peace.